Really excited to have this discussion today with four really esteemed panelists from the industry representing broker, software, Acord, which is somewhere in between all these things, on the claim side. But we'll talk a little bit about disruption and transformation, where we are in that mindset. We'll talk about some best practices and where we've seen innovation probably make the most headway, and then talk about the road ahead with that. But why don't we start off by hearing a little bit more about our panelists. Bill, you want to kick us off?
Thank you, Rick, and thanks for asking for the big room. This is Rick asked for the big room. He had high hopes for the audience.
Invite your friends. There's plenty of room up front here. Yeah.
Hi, I'm Bill Peroni, President and CEO of Acord, a global standard-setting body for the insurance industry, 36,000 members worldwide. It's 100 countries supporting about 85% of the world's premium. Prior to this, I was the Chief Operating Officer at Marsh, Vice Chairman at State Farm, partner at Accenture, ran the insurance P&L at IBM, so always insurance, always in the industry. So thank you for hosting this, Rick, and thank all of you for attending today and my panelists for being part of this event.
Thanks, Bill. Thanks, Rick. Hello, everyone. My name is Arun Balakrishnan. I'm the founder and CEO of a company called Xceedance. We provide a wide variety of services exclusively to the insurance industry around back office management, middle office, underwriting services, claims, so on. Have about 3,000 teammates and 130 clients across 6 different geographies. Before that, I was the CEO for Berkshire Hathaway's insurance business in India. Prior to that, an internet entrepreneur in India trying to sell insurance online. Nobody was even buying books online. So you can imagine what happened to that. But
Just
really excited
early.
to be a part
Just
of it.
a little early. It'll get there.
You were ahead of your time.
That's the story I go with.
I like it. I like it. Hi, Jillian Slyfield, representing Aon. I'm the Chief Innovation Officer for Aon globally. And within innovation at Aon, we look after the macroeconomic trends that are impacting our clients, for which our industry hasn't kept up. And how can we make investments ahead of revenue and in a way that adds value for clients both today and over the 5 and 10-year timeline?
Great. Hello, everyone. My name is Farooq Sheikh. I'm the Global Head of Insurance at Unqork. We are a no-code platform serving insurers and brokers globally in leading and helping support the transformation in the industry, working with our panelists and friends here. Very nice to be here.
So we'll jump into a couple of questions from me now, but really encourage folks to submit questions through the app. We'll make sure to leave a couple of minutes, albeit brief, at the end to go through as many of those as we can. So please have those come through and we'll get to them at the end. But Jillian, one of the things that we talked about before we had the session was really how different it feels from 5 years ago. 5 years ago when we were at ITC, there were a bunch of digital MGAs popping up. There was real conversation around whether we were going to see that disruptive moment of whether the broker was still going to be involved. We've seen some of those companies go public and falter. We've seen some of them not actually live up to a lot of their promise, and still some a little too early. Can you give us a little bit of a mindset of how brokers are thinking about this disruption, transformation, collaboration kind of debate? What's the temperature feel like at an organization like Aon?
Yeah, I mean, if I look at ITC over the last, if I look at kind of 5 years ago versus today, I think it still is disruption, but we're disrupting together in a more collaborative way. So it's not the insurtechs disrupting the brokers or the carriers, but all of us saying that there's improvements and efficiencies to be made in our industry, and there's a way to do it better together than when we were all trying to do it alone. So I see it more as a view on collaboration and how we can work well together. The other piece, and I was talking to one of our venture capital friends recently, and I think he said it best, which is it's a capital I instead of a capital T. And what he meant by that, and I couldn't agree more, is that when we were leading with technology and then having the business model follow second, some of the businesses did falter. Yep. But when we lead with insurance and say there's a technology that can enable that business and create better service to our clients, more efficiency in our business models, then we're all winning. And so what I'm seeing is that we see this transition to better underwriting, better data and analytics, better foundations in insurance with the insurtech community, and a real cooperation between all of the parties involved to get to a vision that we all see there as being disruptive.
Now, hearing venture capital friend, that just seems like an oxymoron to me, but nice to know that exists. Bill, given the collaborative stance that Acord has, would love to hear your thoughts on this. You've had so many new players emerge in the scene coming up. From 5 years ago, InsurTechs in this room could fill up, what a conference like this would have been five years ago. Trying to figure out data transformation and collaboration. What's the point of view from Acord on that?
Regarding data?
Oh, just like all the new players coming in, like, do you feel like that collaboration sense of we can, disrupt together, as Jillian said?
Well, look, I think the industry needs to be open to perspectives of new entrants. Clearly, we all benefit. There's a wisdom of teams, so to speak, so them coming together. I think we welcome it, right? Anything that brings new ideas to the industry, whether it's from historically important firms, the insurance industry with new ideas, as well as new entrants. So the energy on the floor was really intoxicating. So I think we're very excited about it. And we have special programs for startup firms as well, so they can accelerate their impact for the industry. So we're very supportive of it.
Yeah, and I think one of the things that we've observed at our firm, and it seems that this is consistent with some of y'all's views from our earlier conversation, is the innovation is happening in different fits and pockets. This is being treated very differently from the SMB lens as it is in enterprise, P&C, residential. We could have a conversation that's an hour long about global versus domestic here, but I'd be really interested if we could dive in and talk a little bit. Maybe Farouk, you can give a little bit of perspective. Where are you starting to see some of this disruption, perhaps, manifest more? Do you feel like it's more acute at enterprise, SMB? Would love your thoughts.
This is a great question. I think there's a journey that we're all on collectively, right? Over the past 5 years, 10 years, 20 years, as you think about it, right? Insurers, carriers, brokers, InsurTechs together. And we're starting to see some progress across many specific niches and segments, right? Whether it's in the small commercial space with the emergence of some of the digital brokers and digital carriers, whether it's in the kind of global markets with Lloyd's in London being a big kind of example, whether it's what we think about increasingly transactional business, straight through processing kind of a business, as well as the emergence and continued investments from large brokers, Aon, Marsh, Willis, and others. So we're starting to see a significant amount of movement in specific businesses, in specific niches. And I think that's kind of where we're starting. Like cyber is a big example of that, where the industry as a whole is starting to move in a certain direction, and there's more and more signs of disruption and collaboration as solutions come together. And I think that will continue to manifest itself over the next little while. At the same time, it's not only these niches and segments, it's also starting to emerge in the large commercial space, multinational space, and so forth, right? So the bleed-on impacts into the core of the business is very clear.
Which a couple of years ago was really just about attacking the SMB agent, the poor SMB agent, just really transacting them away. Now it's really actually starting to get to some of the more hairy and exciting and bigger things, albeit early innings. I mean, Arun, I'd be interested to hear your point of view on you guys do some front of house stuff, you do some back of house stuff. Where are you kind of seeing the most acute need with the clients that you guys are working with?
I think specifically in the context of commercial insurance broking, I think, there is a big part of the work happening in the back and middle office, which is really the broker's responsibility, right? I think if you'll break it down into two buckets, which is small and mid-market and large, I think the needs around these are very different, and the innovation approach to this also has been different, right? I think when we look at the smaller and mid-market ones, I think one of the first things around things like Acord made a big difference, right? I mean, standardizing data intakes, and those lead to a lot of things, but the kind of InsurTechs which have come up, the new business models, direct to consumer, are all trying to address that with a very different approach. And if we take the different segment of our large commercial, I think there we still have a lot of room to innovate, think about, because there's a massive amount of work which companies like us are doing for the brokers, which frankly we shouldn't be doing. I think it's a cost to the industry which can get minimized. A good example I have is distributed ledger technology. When it came in, the entire focus was on trying to disintermediate the broker, whereas the ideal place that technology really fits in is, if you think about it, the best use case is distributed ledger. In insurance and reinsurance, you're just trading financial statements, right?
Yeah.
So if we take an approach of taking new technologies like this to disrupt that side of it, I think the potential is a lot. But collectively as an industry, we haven't really focused on it as much. That's at least my view.
Yeah, I mean, distributed ledger has been one of these great cases of trying to find a nail for a hammer, or vice versa. Where we have seen so much of this imperative for folks to use technology without any absolute understanding of how the insurance industry works. And we've been in a fortunate position to actually back people who come from industry, not traditional tech world, and the beauty of no low-code software has definitely made it a lot easier for them to launch. But as you think about this from the internal perspective, Jillian, all these new technologies that are coming to the forefront, is this really about optimization and finding ways that an organization like Aon can transform its operations and get more efficiency in the back of the house? Is it about differentiation and a world that's consolidating and competitive, against your peers, or is it, I guess, third track innovator's dilemma that you have to worry about that, leapfrog that what if we're all wrong, the new players actually can transact. Be interested to hear kind of how you think about that portfolio management theory of, all right, this is the reason why we need to innovate and think about innovation at Aon.
Yeah, well, I don't think they're mutually exclusive. So I think we would be silly not to use innovation that makes us more efficient and helps us serve our clients better. I think there's so many, frankly, there's insurtechs here, there's others that we're partnering with, there's some that we've built, and even just systems and processes inside of Aon that have been innovative that do create more efficiencies, create better service, might be something, as simple as certificate processing that's, faster, better, more accurate, et cetera, right? And those are the table stakes, but I'll tell you, those are the things that we can all, as an industry, fall down on pretty quickly. So we've got to continue to innovate on even those most basic functions. So absolutely, we need to stay focused internally, and that does not mean that we don't focus externally. We do both, right? And so when we look externally, that's where I'll go back to where I introduced myself, and I said, we're really looking at where, what are those macroeconomic trends that are impacting our clients. And the industry might be evolving, but we're really looking for more of a revolution, right? So there's certain things, and when I look at Aon, whether it's in our property department, it's casualty, it's in reinsurance, any part of our business, we're going to continue to grow, we're going to continue to evolve, we're going to continue to innovate, but we also need breakaway growth, and we also need new products and solutions that look across different industries that weren't even here a couple of years ago, or that are just emerging today and are going to have, they either have significant needs now, or they're going to have significant needs in a 3 or 5 year horizon. And we've got to start building for that. And so the way that we look at it at Aon is, yes, we're going to innovate internally. We also innovate across the firm, across our solution lines and in our geographies. And then we have my team, which is Growth Ventures, which focuses on 7 different areas of investment that should be that breakaway growth, right? So there are areas like climate transition and digital assets and mobility, as an example. So what are those areas where our clients are leapfrogging our industry, and we need whole new products and ways of thinking about bringing capital to the risk? And so we attack it on both fronts, the front of the house and the back of the house.
So as you think of kind of these new technology, moonshots or leapfrog, we're still in an industry that so many of the incumbent archaic systems really, monopolize the sector and make it difficult for folks to innovate. You talk about something like certificate processing, and the players that dominate the AMS industry or policy management. At the end of the day, these are systems that are 30, 40 years old, that we're developing on top of and forced to use. Farouk, I know this wasn't one of the questions that you signed up, but given where you guys are in the industry, you need to come forward with a response on that. Is the answer that we need to find ways to collaborate with these existing players, or is it opportunity for new players to rise up and kind of claim, a position in there? Or, be interested to hear y'all's point of view on it.
It's actually a very fascinating time as an industry, really, right? Because historically, what we saw from a technology perspective were investments in these large infrastructures and technology programs that at times were monolithic, at times were kind of latest and greatest for that time and age, but have since then kind of been supplanted by a lot of new technology coming together. Like, I think it's the same conversation in technology as it is in disruption, right? It's never disrupting alone one technology provider, one kind of player in the market. So we're starting to see this emergence of an ecosystem play as it looks to serve the capital I that Gillian mentioned, right? So here's the way we see insurers progress or brokers progress. Here's how you pull together the art of the possible from either AMS systems or partnerships between no-code providers like Unqork, but also with core policy and kind of claims capabilities that all come together in the service of that disruption, right? Because at the end of the day, no one single technology provider or broker or carrier can manage through this disruption alone, right? So the ecosystem play, in as much as it's true within the on the insurance side of the house, it's more important in T, right? And in T, it even becomes much more important because everything has to integrate, work together, really kind of be able to coordinate and interoperate with each other. So that's where we're seeing, and there's a lot of focus from Unqork in the development and progression of the ecosystem that supports that transformation, right? Whether it is the AMS providers, the policy systems, data providers, OCR and ingestion engines and so forth, right? Along with, and there's very significant movement from cloud providers, whether it's AWS or Azure and GCP, right? Because they're basic plumbing and infrastructure across the entire industry. So when you start bringing the power of these major movers, right, whether it's AMS and policy admins or cloud providers, that's when you're starting to see some really nice activity in the market.
Like, just to weigh in on this, because I mean, it happens a lot. You're seeing as the industry gets a bit bashing about why do we have 30-year-old systems and 40-year-old systems, and we hear that often, right? You know, banking changes, why can't insurance? There are some fundamental aspects about the insurance business which make it hard to transition. Let's understand, you know, like if somebody's been getting workers' comp claim or somebody's on a death benefit since the 80s when the policy was written, till he's dying, you still have to pay the claims, right? So the systems designed then, you can't lose data and all. So there are actual challenges which make it difficult for the insurers to make a switch on and off. So how do we address the future? If we talk about the new systems and everything, are we really thinking about the product and the manner, or are we just recreating the past problem in a new thing, right? So that's one thing we collectively need to think about. And if we break up, as an industry, see, with technology, there's a data layer, there's an infra layer, and there's an application layer. Infra layer, everybody is now going more accepting of cloud and everything. Application layer, we have no business of being in, right, as an industry, right? And there'll be innovation on that, changes, everything. What we need to really own to make technology smoothly transition from one generation to another, new products, everything, is that data layer is what there's a collective standardization around usage, everything which drives it. And I think there's nobody better than Bill who probably can talk about that. But that application layer gets too much of focus, which makes it hard for us to keep up with the pace of change required on the operational side or new products or anything like that. Just, it's a topic which comes up so many times, I thought I'll just weigh in.
I mean, I definitely don't disagree with you. I think the data layer is certainly one of the most exciting things about this, but there's kind of a behavior change issue that we should definitely talk about. But I do want to touch on this data angle a little bit, because I think one of the things that we've seen, especially with machine connected or digital data that we've been able to bring in, I mean, there are still forms of insurance out there that there are zero, underwriting to the individual entity level, and that's changing. As we see this kind of fire hose of data that's becoming available, cyber is a great example of this, but I could, go look at supply chain or any IoT-enabled solution. It requires new forms, it requires new ways to process this data. It also requires a lot more cost. You're talking about headcount to analyze it, talking about new software solutions. How are organizations thinking about this? Is this, an edge on the competition to make sure that we're getting better underwriting for our carriers and our clients, or is it really just a necessary that we need to do this, otherwise we're going to be left in the lurch? Be interested in point of views from anyone on it. I know that we didn't prepare in advance on this, but.
Well, Rick, we do an annual study, and it's fortuitous that we did it pre and post COVID, where we look at the 200 largest carriers worldwide, and we rank them in terms of digital maturity. At the bottom are digital laggards, isolated digitization, they're on a journey, digital insurers.
Those are the ones in
digital
Bill's penalty box. You know.
So interestingly, we assessed them. We developed a methodology. Anyone who's seen my previous studies, there is no correlation between IT spend and total shareholder returns. But if it's aligned with strategic intent and you have a culture that embraces technology and innovation and et cetera. So we have a methodology, we assess it. So pre-COVID, what we found is that digital laggards, when you looked at total shareholder returns, their combined ratio, these are carriers now, combined ratio, return, any operational metric, they actually did okay, right, to your point.
And I definitely want to get back to that.
They limped along, and then the digital competitors, those who are highly digitized, actually did superior, so clear. However, post-COVID and during COVID, because we have been doing this, that might have been the moment of truth or the inflection point in terms of what you're talking about, because now you began to see their growth stall, their combined ratios deteriorate, issues with customer satisfaction and retention, just across all the metrics we looked at. So now whether that persists, right? People return back to work, customer buying patterns change, et cetera. We don't know, but there really was an inflection point. So COVID may have been that. Now, it was a future inevitability. And our industry is notorious for having technical debt buildup, and it's pernicious because it doesn't show up on the balance sheet. No one accrues for obsolete technology, and it benefits the income statement. You don't spend on technology, it benefits it, but we think, we'll see as we continue the study now, what happens. So it's a long winded.
And I definitely want to dive in more on this point because I do think the behavioral pieces are, as well as the incentive.
And by the way, one of the things we look at is culture.
Yeah.
In the end, there are problems that money can solve and problems that money cannot solve. If you have a dysfunctional culture that isn't aligned with innovation and change, and we as an industry are notoriously bad at change. 2/3 of change efforts in the insurance industry fail along one of the following dimensions: scope, time, or resources. So we don't like risk, we eschew risk, and we don't like to change what we do, and we're not so good at it.
Maybe like if we take a step back and broaden our aperture, right? Like this conversation around inflection points and change is a very pertinent one, right? But and insurance in some ways does a good job of learning from others to some extent, right? But if you think about major industries and what they have gone through from a transformation perspective, it's easier to talk about it in hindsight, right? So if you think about the cell phone industry, value has moved from hardware to software, so to speak, right? And technology in that case. And you can always point to the launch of iPhone or what have you, but that's a hindsight conversation, right? Auto industry is going through that transition right now with more of the EV, kind of emergence of EV as one kind of area of focus and all that. And I am not trying to imply that financial service or insurance is in any shape or form like ending up in that situation, at least not that it's visible right now. But there is a transition that all of these industries are going through, and there's an inflection point that's much more readily visible in hindsight, right? So as you think about insurance from that perspective, there has been a big change, right? And the importance of balance sheet might be, or the reduction in importance of balance sheet might be the change that we can talk about today, as opposed to the emergence of technology as a differentiating factor, right? Like that's kind of where we are in this transition point. But as we project ourselves out another 10 years, another 5 years, or another 20, whichever way, is it possible for us to say that there might be an inflection point where increasingly you are going to start ending up in different business models, different niche-specific insurance applications, whether it's embedded, whether it's SME, whether it's any kind of segment-focused, where insurers have to behave differently, right? And we're starting to see some signs and symbol of that happening. So if that's kind of the direction of travel, then eventually balance sheet becomes less important, and we're already seeing private equity money pile in to provide that balance sheet capital. Then what becomes important is your ability to figure out distribution, the ability to really kind of address customer needs in specific segments and so forth, right? So that's where we are in terms of the inflection point. It's not clear whether the competitive dynamics are going to fully transition to technology as the key, similar to how it has in like software in cell phones, for example. But there is a shift away from historical dimensions of competitive differentiation, and there are new dimensions that are coming up, right? So to answer your question around change and how we are seeing it right now, that's kind of where we see insurance to be, and it's of course emerging, and banking is ahead of us to some extent in certain dimensions.
Jillian, anything you wanted to add on that? My next question is on behavior change, so I will be looking straight at you for it. So I guess as I think about this, everyone who's in this room, anyone who's at this conference, especially in the industry of commercial insurance, on the brokerage side, they care about relationships. Relationships are paramount. That is the lifeblood of this industry, and we can talk about data, we can talk about technology, but if you're in this business, it is because you believe in relationships. So as you look at this kind of transformation, innovation mandate, you have a user that kind of values that relationship and that intimacy that perhaps isn't covered by Zoom. You also have very limited IT spend or incremental IT budget in an industry like this. And then lastly, you have this dynamic that Bill's referenced, that there are plenty of players who have been digital laggers, but through their own process power, even if it's just they make accepting claims more difficult than others, have been able to get by. So if you are an organization trying to manage this, how do you motivate the digital laggers within your organization to get excited about something when they care about relationships, may have limited budget, and there's a justification that they can say, hey, it's worked for the last 30 years. What's going to stop it from working now? Be interested in how you motivate, other aspects of the Aon organization.
Yeah, actually, I think that's the easy part. Because I think if you go back to the relationships, what we all really like to do is serve our clients. Yeah. That's the relationship. We like to show up and add value. So I think whether you're talking to a broker, or an account executive, or any of our insurtechs here, the fulfillment in that isn't the drink. Sometimes it is. But the fulfillment is I can serve you better. And when we use better data and analytics to create insights for our clients, we can serve our clients better. And that doesn't come from a spreadsheet, and it doesn't come from something that's sitting on my desk in paper. It comes through digitizing our business at the foundation level. So when I look at investments that we make through growth ventures at Aon, one of my commitments is that we have a technology underpinning in every single solution that goes to market, coming from my team. And the reason I say that is because I know we're empowering our team members, our colleagues around the world, better to serve their clients when we do that. So, to answer your question, is the behavior change actually isn't hard. And if we look across, whether it's Aon or any of your firms that are here, even the largest companies, the IT spend is actually massive. It's just, to your earlier point, we have an incredibly complicated infrastructure, so some of it is maintenance. So there are dollars being spent. I think where the change management comes in is not making it actually harder for people to do their jobs with technology. We do that all the time, by the way. We create technology, we put it in place because it has an outcome that we like, but the means become difficult and may or may not justify the ends. And that is hard. That is hard to manage the change there because the incentive for the colleague who's trying to serve the client isn't there. However, if we make it a little bit easier or the same, but the outcome and the deliverable to their client is of a higher value, 100% they're going to do it every single time with joy. And I have few people that say, no, I don't want any new technology. They want to do their jobs more efficiently. They want to serve their clients better. They want to have more value. They want new products. They want to be the person who comes and delivers it versus their competitor. So I actually don't think it's a behavior change on their side. It's a behavior change on our side so that we bring the right tools to the table so that they can do that.
If you have time, just to add to that, right? I think just seeing it, I completely agree with what Jillian mentioned, because there's a whole perception that, the relationship building is just wining and dining and taking out customers, and it's not that. I think fundamentally commercial insurance, unlike personal insurance, will remain a push product in the sense, even us as industry professionals don't know all our coverage needs of our business, how they evolve, how they change, and having somebody who can advise you on that is going to be beneficial. And if we equip that person with more information, ability to do and help the clients better, they want it, seek it, reach out to us. Provided it is provided at a reasonable cost, because their business model is entirely based on when they make money. So fixed cost structure around this will not work. If there's a variable cost method wherein they can provide more value using technology, I have only seen agents, brokers, everybody being more welcoming about it rather than anybody averse to it.
Yeah, and I definitely want to double down on that because I see organizations like Aon leading like that, but there are very few Aons out there, at the end of the day. And I think one of the things that we've seen historically very, very difficult most broker-facing technology platforms have had significant trouble scaling. For what it's worth, RiskMatch and 3Flow, they scale by giving their technology largely away for free to the brokers and making the carriers pay for it. And it's worked both times. As you think, Farouk, and for Xceedance as well, as you're going and trying to be a provider to brokers, a technology provider to brokers, how do you guys think, what are the best practices for making sure that you can cross the chasm, so to speak, and achieving a significant role, especially when a large organization like Aon may have long sales cycles, the smaller folks may be more digital laggers. How Unqork and Xceedance break through that path?
Well, very, very happy to answer that question, right? So as we think about the supporting our clients, insurers and brokers from a technology perspective, and then scaling that, there's a pretty significant investment in verticalization of knowledge and information, especially as we think about, and Unqork is a platform, right? So we serve many verticals, but when we think about insurance, we are heavily verticalized. We are experts in the particular solution that we are providing to our customers, whether it's underwriting workbenches on the commercial side from a kind of carrier perspective, or it's broker placement platforms and others from broker perspective. And then the ability to architect it, ability to deploy it with a multi-country, multi-language, multi-currency, data residency, like those are the elements that you have to really take care of while understanding the complexity of the business that you're trying to serve. So it's a lot of really deeply understanding the business problem that you're trying to solve and bringing the best of technology to address that and scaling it in a rapid fashion, whether that's in one country or multiple countries, whether it's in one currency or multiple currencies and so forth. And that's a particularly hard problem. That's the problem where most of these programs fail. And that's kind of where we at Unqork spend a lot of time scaling technology across 10, 20, 30, 60 countries for various clients, right? So that's the big focus.
Our quick view as a philosophy on this is with small and medium size brokers especially, these are lifestyle businesses. We try to sell them any solution which is a cost to them will not scale. They don't like costs. So if you're selling anything to them, unless you can demonstrate that this will increase revenue, increase top line, bring in more, there is going to be a scalability issue, acceptance issue and everything. So we have to understand the nature of your customer, provide them what they need. I mean, they're willing to put in an additional hour of work if required and be inefficient rather than spend money as a cost on it. So that market needs technology to grow their revenue, grow their income. Fundamentally, that should be the goal of technology, not the latter. If you build that, it will scale. The latter doesn't scale.
Yeah. So came a little light on the questions, from the audience. I'm going to throw out one of my own. We had the Fed raise rates another 3/4 of a point today. Market went from up to down. Topsy-turvy world that we're living in with the Dow and NASDAQ down, pretty heavily over the last, couple of months and some concerns ahead. How does the cloudy economic landscape, we'll say, impact this mindset with the industry? Do we take a break, or is it full speed ahead that now we need to innovate more than ever before?
Full speed ahead. There's no question. I mean, any time that there's volatility in the marketplace, that's where we all in this room need to double down. So that's not where we take a break. That's where we say, oh my gosh, our clients actually need us more than ever before. There's volatility, we need to lean in. So no matter who you are in the industry, this is where we shine or where we should shine. So for us, this is where we continue to make investment or even double down on certain investments. And certain aspects of our business, if I look at the channels of investment that we're making through growth ventures, some of them are actually kind of positioned to thrive even better in a recessionary environment. We have an intellectual property offering that is stronger in a recessionary environment. So I would say absolutely put down the accelerator and go.
Any other thoughts?
No, actually captured it very well.
I think the revenue and cost pressures that become more acute in these environments. So it becomes easier to talk a little bit about doing nothing is not an option, right? Given the pressures that any broker or carrier or provider, software provider or service provider is facing. So it's a great time, right? Because the people who are looking at seriously building the business or transforming some of the industry kind of dimensions, they really get a time to shine.
transformation, innovation through collaboration, moving from transactional to more strategic relationships, being able to offload some of the things that are probably the less exciting parts of the job to focus on the fun stuff, whether that is fulfilling and serving drinks or going and having really strategic conversations, and definitely full speed ahead, it sounds like, with murky clouds out there. So that's our time. Please, everyone, would love it if you could give a round of applause for these 4 panelists. Thanks for having us.
Thank you.